Hello everyone, welcome back to my channel The Trailblazer. Welcome to a special learning video today on the concept of averaging, of course, which was a question from one of our subscribers. Having said that, without any further ado, let's dive into this topic of averaging with an example. So we'll try to understand this concept with a real example where I have done the averaging on 24 July 2024 and we'll see how I have done the averaging and how did it resulted in a big win. Okay, so having said that, what is the current trend? Obviously, it's a bullish trend. Market is in a bullish trend for so long time, and then based on which there was this resistance around this area, around 52,000, 52,000, and then market broke about this level, and with a huge bullish candle. After which market became very much consolidating and then sideways, and this level around 52,000 was a very prompt support, and then which got broken on the day of budget 23,000 July 2024 with a very big bearish candle and gave the closing also below this level. The very strong support will now act as a resistance, obviously. So now what is the view for the intraday trading based on the opening, right? So my view was like this. Let's say, for example, if market opens flat to little bit of gap down, then obviously I'll look for a bearish bets, and then my view is that at least market is going to test this low of the previous day candle. So then what if the market is going to open the big gap up above this level, 52,000 level? My view is that market is going to make a inside candle, doji kind of a candle here with little bit of a sideways volatility, where we can look for 30 to 50 points of premium, kind of bets. Okay, so what if Bank Nifty is going to open huge gap down somewhere around this low of the previous day? So then my view is that let's say it's a wait and watch kind of scenario for me, and then at least for some time Bank Nifty should trade at least for some time sideways and then break above or below, based on which we can play the bets accordingly, right, in the given direction. So that was a view. So in the pre-market opening, in the pre-market market was Bank Nifty was indicating a little bit of gap down opening, which confirms our view of bearish bets. As you know, if I try to draw a fib retracement tool from the high of the candle to the low of the previous day candle and switch to lower time frame, so this is where we can actually try to understand how we did the averaging, and then how it helped us win big. Okay, so this is where the market opens, and then let me try to mark this level, this 50%, and 50% fib retracement level at 950. 51,950 is a very important level for me. And then what was the target I was talking about? Somewhere at the low of the previous day, right? So this was the target I was talking about. So market opens here, tries to move up and got rejected immediately, somewhere close to the closing of the yesterday, right? And then I was still waiting for the next couple of candles, and then market moves here and then try to we can see a little bit of rejection immediately where I entered it. I wanted to enter into the trade here, for example. Here the concept you have to understand is that let's say what is your SL. So we'll discuss everything based on the spot chart itself, but then all this concept is also kind of applied for the premium area. For make it a little simpler, we'll talk about based on the spot chart itself. Let's try to understand your SL. Your usual stop loss is 100 points on the spot chart, and then your usual position size is 90 quantity. Okay, for this example, for the sake of example, we'll take this. Okay, now the maximum risk per trade coming around 90 multiplied by 100 is 9,000, correct? So 9,000. Now market, let's say why you wanted to enter here is that based on the rejection second time, you can see this wick based on which you wanted to enter into this position, thinking that market can fall down from here. Now that to the contrary that, what if, let's see, if you look towards the left side, you can see a lot of volatility in the market, based on which If market moves a little above and then fall, ultimately due to the high volatility, it may take your SL away. Okay, so then you might end up losing the trade. So now based on which, let's say if you want to increase the SL, let's say for example to this level where you marked getting 230 points of SL, let's say it is increasing your risk if you enter with the maximum quantity. To compensate that, what you can do is you can actually reduce the quantity, and with a lesser position size you can actually enter into the trade. So for that reason, if you could enter with one third of your actual position size, that is 30, you can enter into this position, and if you multiply this 230 into 30 now, then that is going to come around 7,000, which is under 9,000, which is your actual max loss per trade. Hope you are understanding that. Okay, now you are setting in this trade, and finally price comes very closer to your stop loss, and then it didn't take away your top stop loss. Instead it forms inverted hammer candle indicating the bearishness or further fall from here. This is where I'm interested to buy a little more quantity one more time here at somewhere around 870. Correct? So now I'll buy, let's say for example, 30 more quantity here. So I buy 30 more quantity here. I already bought 30 quantity here at this level. So 720 was the initial quantity. At around 870 is the second quantity of 30 I bought. Correct? Based on which my average buy price would come around 795 something, which further moves my position somewhere around 800, for example, right? So to make it the math simple, let's move it to 800. Okay, now you can see how magically the risk got reduced to 150 points from all the way from 230 points, right? So, and look at this, target, or reward became 1:3. Earlier it was 1:1.5 risk to reward, and now it became 1:3 kind of risk reward. Okay, that's how, if you do the averaging properly, obviously this is going to boost up your risk to reward ratio. And also one more thing, what you are observing right here is that initially when you entered with 30 quantity, now you are sitting with a 60 quantity, and now the quantity is also doubled. Okay, so that way your risk to reward is going to boost up with averaging. Okay, with you do it with a proper logic. And also that if you calculate the risk, now you are sitting with a 60 quantity. If you multiply the 60 quantity with 150, the risk involved here is 9,000, and your risk per trade is also 9,000 when you say actual position size of 90 with an actual SL of 100 points also, right? Based on this good amount of up move, you might be thinking that if at all Bank Nifty is going to this low of this candle, it may reverse. It happened also, right? So based on which, if you want to exit here itself, somewhere here itself also, you are still getting 1:2 kind of a risk reward ratio, with which you have the leverage of exiting early also when you averaged. So still you are getting 18,000 of reward by risking 9,000. So you are getting obviously risk to reward ratio of 1:2. Okay, so and you are winning big also. Okay, that's the concept of average. Let's say for example, it is not at all suggested to add some 90 quantity here, 90 more quantity somewhere here, and 90 more quantity, and having 270 quantity, and then if that is going to take away your SL, you are going to end up losing big. Okay, that is not the right way of doing the averaging, right? So the right way of doing the averaging is that whenever you want to enter into this trade thinking that the market may go straight away to the target from here, you would enter with a smaller quantity, or let's say one third of your actual position size in a trade, and then if you get one more chance, you can average here, or you can average here also. Okay, until this the maximum SL where you feel is a proper SL you should be ready to accept if the price is going to go above that as well. Okay, so that's how you need to do the averaging. And uh, my strong suggestion is that I strictly don't suggest someone who is a beginner to do this, concept, because rather I suggest where you should be taking the target if the trade is going in your direction, or accepting the SL if trade is going in against you, and then accept the stop loss and close the trade in red, right? So that's how it can be, at least until for a few days, where your account grows to a certain amount of capital, where you can start experimenting on this concepts, or advanced concepts of averaging and pyramiding and all that. Okay, hope you have understood the concept of averaging, how it is going to boost your risk to reward ratio when you do the averaging in a proper way, with a proper logic. Okay, hope you have learned something with this video, and then try to subscribe, and then like and share, so that I can bring in more such learning content in the future. So if you want me to make a video on the concept of pyramiding as well, where, let's say, contrary to this move, let's say you assume that bank nifty is going straight down from here, how to add the quantity while the trade is going in your direction, that concept is called as the pyramiding, right? So, and we'll try to make a video on that. If let me know in the comments that if you need a video on that concept. We'll discuss about the pyramiding, as well as the pros and cons of pyramiding and how to do it properly. You can watch the live trade video of 24th July from the link given below in the description. So having said that, I would like to end the video here. Thanks for watching. Bye bye.